Hi and welcome to episode 13 of the Aussie Tech Crypto Show, a show about cryptocurrency from an Australian viewpoint. This show is brought to you by Australia Coin, Australia's true blue Aussie crypto coin. Join the Crypto Cobbers Facebook group for airdrops Friday Arvos. I'm your host Jason Oakley and this is my co-host Will Tomkinson. Hey Will.
Very much. Good evening. How goes it?
Pretty good. How's yourself?
Well, exhausted because, you can't tell by looking at it.
Are you sure about that?
I'm not sure of much at the moment. So if I go quiet halfway through the show, just carry on.
I usually do.
Yes. No, it's been a pretty full-on week or so, but yeah, no, we're getting there. It's all been a few interesting things happen in the last couple of weeks,
yep.
So it's all playing the waiting game at the moment, and we shall see what happens.
Alrighty then. Each week we hope to bring you some interesting information and news about the crypto world and what it's all about. Today we talk about Omi's Go partnering with ShinhanCard, the Monero fork, MailChimp banning crypto, the SEC charging some crypto founders, the Rockefellers investing in crypto, and our coin of the week, Tron. We also have some discussion on Masternodes, which was a request on the Crypto Cobbers Facebook group.
It was, which was actually interesting.
Yeah.
It's always good when you get actual real world feedback in these situations. It makes
instead of the usual spam we were getting.
Yeah. Oh man.
I finally managed to enable the capture on our forum comments, the website comments. So,
since we've done, between us, we've done quite a lot of podcasts, and this one has just been insane with the spam.
Yep.
Not only through the emails, but my Facebook feed, my Twitter feed,
yep.
My YouTube ads, everything's just absolutely nuts.
I had
spam,
a month of people creating fake Stellar Lumens pages and then putting my profile and going, Jason has just won 10,000 Stellar Lumens. You could be up next. I'm like, no, I didn't. Delete, report.
No, yeah.
Jason has won 20,000. Like, piss off. Jason has... No, I didn't. Go away and stop putting my picture on your damn page.
Oh, it's been so bad. I don't know why. I don't know if it's because it's the new hotness or what, but
yeah,
it's just absolutely ridiculous at the moment. You can't do anything without getting... even like on my work computer, on my work system, which I've never watched an Aussie Tech Crypto on the web. I've never been to the website. No, I've deliberately stayed away from it, and I'm still getting crypto spam. So I don't know.
Well, but, I should also add, coming very soon, I'm just waiting for approval in the Fitbit store, an app for Australia Coin, which has the Australia Coin logo in the back of an analog clock, and you can also put in your wallet there, address, and it'll transfer the QR code, so you can tap on the QR logo and it'll show your QR code, and someone can snap that with the Australia Wallet Android app and then send you some NAR.
That's going to be cool.
That was Jack's idea, that one. I was just going to have the watch with their logo in the background. He's like, put the QR code on there. I was like, okay, now I'll just figure out how to do that. And then the Fitbit, I could do it. The Fitbit's got a simulator where you can create your app and test it before deploying on a watch, which takes a while to send to your watch and then test and then find it was wrong and move something across 6 pixels and then try it again. But the simulator is great, except for file transfers, where there's a tiny bug in that the simulator crashes as soon as you do a file transfer. So you type in your wallet address for the Australia Coin wallet, and it transfers the image file of the QR code from the Australia Coin website and then crashes the simulator straight away. So I had to do all the testing on my watch to get it to work, but it's all done now, and it's in review with the Fitbit review team for both the Fitbit Ionic and the Versa, so it should be out soon, and people will be able to send you all the NARs using the QR code on your watch.
That is starting to bring it into real world application. You literally can like go to Bunnings and buy a snag now. Like,
sweet.
you know, it's good.
Yep,
it's good.
Let's get in some news, dude.
Oh, do we have to? No. I suppose they don't come here and listen to us crap on for an hour. Oh,
they will.
Yes, they do.
Suckers.
So, cryptocurrency startup Omize Go has entered a new partnership with ShinhanCard, an affiliate of the Shinhan Financial Group, to accelerate the development and adoption of blockchain technology across Asia. The partnership is at the stage of a memorandum of understanding.
What?
From Moo.
Moo.
Apparently, yeah. Moo. It also includes the Omize payment ecosystem, which is a traditional finance gateway to handle payments in Southeast Asia. Omize and Omize Go are working to revolutionise the way digital value moves globally. For some reason, I could not make 3 words work then. With the end goal of creating a platform that facilitates a decentralised economy. We want to make it easy for those who need online asset exchange as part of the business to connect seamlessly to the OMG network, said Juan Hasigawa.
Sounds good.
Omize CEO upon completion of the Moo deal. For Omize, the MOU time. It makes sense. Now, okay, they've written MOU 3 times and they've changed the way they've written it every time. Sometimes it's capitalised, sometimes it's small, sometimes it's got some random capitals thrown in. Anyway,
you got to keep things interesting, right?
As well as help them exert a presence outside their home currencies in Southeast Asia and Japan. And for the Omize Go, it presents the opportunity to work towards a long-standing partnership with ShinhanCard, who could very well combine the payment technology expertise with Omize Go blockchain technology. The deal will bring decentralized payment options to the Shihan fan card user base while adding Omize expansion beyond the home base in Southeast Asia and Japan. As for Omize Go, it presents the opportunity to work in a long-standing partnership with ShinhanCard, which could well combine its payment technology expertise with Omize Go blockchain technology.
Sweet.
So it's just another, I guess, step towards mainstream usability, I suppose.
The easier it gets for people to use. I see a lot of complaints at the moment. I saw on Reddit, this guy's like, this is very difficult to make it go mainstream when you have to explain to someone that they might need half a dozen wallet applications. Some may be Java, some may be a web, some may be a mobile app. And then they have to keep the private keys for all of those and the passkey phrases for all of those on their computer. Or they could put it on Exchange, which might get hacked, in which case they'll lose everything. Or they could keep it on their computer, in which case they may lose everything if they forget one of the passwords. And passwords are this long, and the phrases are this long, and there's too many different bits and pieces that you just need something that makes it work. So if you can get it mainstream going through, you know, partnerships with ShinhanCard or something like that, you've got to make it easier for people to use before they're going to do mass adoption.
The other thing I think would work too is, you know, I know Bendigo Bank and NAB and that have got on those little key fob things you carry around. Every time you go to log in, you press it generates a random sequence of codes. Potentially something like that, maybe. Just to sort of clean up the process a little bit. Have a 2-factor make it 2-factor, but have one of them as that, you know what I mean? Like, have your normal login and username and password, then have that as your second, so you don't need to sort of... People
can use Trezor or Ledger keys, but it's still complicated to get your stuff from an exchange or wherever you've got it or been given it onto a key and then carry the key around and then figure out how to use the key.
That's right.
It's okay for us because we're technical type peoples and stuff.
And
you get average Joe Blow, he's like, well, am I going to buy it in Tron? Am I going to spend my engine coin on this? Am I going to spend Ethereum? What's Ethereum this week? Should I wait till next week to buy it because Ethereum might be more and I'll get it for less? Or what?
Especially if you're going to a mobile wallet where you've got access to that sort of stuff on a PC, but then you move across to the mobile wallet and it's a whole different ball game again.
Yeah.
So I think this is the thing that had to happen. This whole integration aspect of it was the
We're still at the bleeding edge of this thing, and yes, these things will come and it will get easier and everybody will invest in it. And we've got some really big people in a news item later on that's really investing in it, but they can afford to give somebody and say, here's $10,000, go put 50 million in there for me and then just tell me how my stuff is going. But for average Joe, it's still really hard, but it's going to get easier and easier as people start writing this stuff and improving the UI.
It is. I don't think there's one silver bullet. I think there's going to be multiple, and it's going to be dependent on the coin. If it's a mainstream coin, the approach will probably be slightly different than if it's a niche coin, which will be probably slightly different than if it's a tech coin. You know, I think each particular coin or group of coins is probably going to have a different process, but as long as they're all readily accessible and easy to use, I think it'll work out in the long run. Yeah.
It's going to take time, and I mean, you can't really complain at this stage. Things are happening, and you know, when the money first got invented, there were a lot of troubles figuring out how do I get my money from here to there. And you had to write it on a bit of paper that was sealed, and then take it over to these other guys, Knights Templars or whoever they are, get them to change it back into coin that you can then use somewhere and charge you a fee and stuff. Now it's all electronic, and it's not really that much simpler than it was, 500 years ago.
Ironically, the principle's pretty much the same. It's still literally a matter of you requesting. Okay, what you're requesting is a $100 note. In reality, what you're getting is a tenth of an ounce of gold that then has to be scraped off a block somewhere and then weighed and then taken to the bank of the person who you're requesting to send that money to, where they're going to weigh it and verify that's the correct weight. So, like, the principle hasn't changed. The process of it, it's just got streamlined, and we don't see that now. Okay, we don't have back currency, so that's kind of relevant. But the principle's still the same. Like the process of the value of the money versus the the money itself being authentic.
Yeah,
it's whether we're talking cash, whether we're talking card.
Bitcoin and things like this, altcoins are all imaginary virtual values of thing, and so is all money. Your bank doesn't, when you buy a house, your bank doesn't have $400,000 that it gives to the real estate, and if you go in there to take out your $50,000 that you've been saving for your home in the last 30 years or whatever, they don't have the $50,000 sitting there. They've got a computer thing that says the value of $50,000 gets transferred from here to there. It's just a bunch of numbers that don't really have any value.
And I noticed the other day, I went to the ANZ to do banking for work, Bank of Queensland actually, and it actually said withdrawals of more than $2,000 require 24 hours notice.
We don't have more than $2,000 in the bank.
Like, it used to be, I think it used to be 10 grand.
Yep.
It used to require notice. Now it's 2,000. Like,
are you crazy?
You can walk into Target or Big W and go, can you get $2 grand cash out at the service counter? That's not a lot of money. It's just ridiculous. And I think, the value is in the eye of the beholder. Look at diamonds. Diamonds are one of the most least valuable pieces of rock on Earth.
Yeah. De Beers has done a good deal with that.
Yeah, that's right. They're incredibly easy to mine. They're incredibly the markets are oversaturated. There's hundreds and hundreds of warehouses full of just diamonds sitting there to try and keep the value up. So they introduced engagement rings as a way to sell them. But other than cutting glass and a few other laser-related bits and pieces, there's not much real-world practical use for a diamond.
Plus, they've got control of the market. So if you say, "Oh, my ex-husband gave me this diamond ring that cost him $50,000. What can I trade it in for? $600." No, you didn't understand me. I told you it cost tens of thousands of dollars. Yes, I can give you $600 for it. Why?
Yep.
Because we're not allowed to sell it for any more than that, because it'll devalue it. We have to keep the fake value up.
That's right. The only difference is, I guess, with cryptocurrency, it's not... the value is based upon the ability to get that currency and how much it costs you to get that currency.
Yep.
So if people were just buying and selling it, they wouldn't have much of a value. But because people are able to mine it and people are able to put a physical value on what it costs them in time, energy and effort to mine that coin, then they know what they want to sell it for, and they know what their time's worth. If as a group they want to sell them, it costs them $5, and they want to sell them for $100, well, that coin is worth $100, because if they've got it and you want it,
and
then you're going to pay what they're going to release it for.
Yeah.
So there's some sort of actual real value to cryptocurrency, ironically.
You're crazy. Why do you say crazy things all the time?
Yeah, I know, right? That's a little bit weird the way it works, but yeah.
Saurabh, Sam Sharma and Robert Farkas
Beg your pardon?
were the operators of initial coin offering that, according to a Security and Exchange Commission complaint filed in the District Court of Southern New York, fleeced investors out of more than $32 million through a business called Centratech Incorporated. What led to Farkas' arrest while trying to leave the country is almost too boneheaded to believe. ICOs have in recent months become a major focus for regulatory crackdowns. Naturally, someone operating such a business would be cautious about attracting too much attention, not Centratech. For starters, the company's ICO paid for public endorsements from celebrities including Floyd Mayweather Jr. and DJ Khaled, though neither are specifically named. Centratech also lied about having relationships with a number of powerful financial companies, including Visa, Bancorp, and Mastercard. These companies were more than happy to send cease and desist letters, drawing further scrutiny to business functionality built on sand. Centratech drastically exaggerated its connections, but as the complaint notes, it also spun up its C-suite out of a whole cloth, going so far as to falsify the executives' credentials as well. Despite obvious red flags, the coin Centratech is created for, its ICO, CTR, got listed on major cryptocurrency exchanges such as Binance and Cryptopia. Its wallet app was approved by the Apple App Store and Google Play Store, helping to sell the lie. The Centratech website remains unavailable. The ICO is a focus of increasing skepticism in cryptocurrency forums and the press, and the Centratech was hit with its first class action lawsuit from a burned investor in mid-December. While attempting to board a flight out of the country, Farkas was arrested. This also reminds me of the fact that Steven Seagal was spruiking Bitcoin. It was Bitcoin with two I's in it, so it was Bitcoin, saying this was going to be the next big thing. But for some reason it turned out not to be, and now he's disassociated himself with it.
Well, he'd know about it being the next big thing.
Yeah. So you've got to be careful of these things. They might turn out to be scams. No way,
No.
right?
It's the internet. Nothing's a scam on the internet.
You might see I accidentally jumped ahead in the show notes. For some reason it scrolled down while I wasn't watching, so we'll go back to
You
your
did slightly
story.
confuse me somewhat.
Confused me too, because I had the screenshot of the other story lined up, ready to go, and I was like, that doesn't match what I'm saying. I better change. I was just looking at my show notes, and suddenly it's like scroll. I was like, quick stop. Okay, I've got to. Oh, what's happened? I don't know. Well, I'll just read this story. That'll do. Nobody noticed anyway. We won't even mention it.
No. I mentioned it once, but I think we got away with it. Wow, if anybody knows where that's from, you can
Faulty Towers.
leave a comment down there. No. When I say if anybody knows, you can leave it in the comment. It doesn't mean you, it means people who can
okay,
actually
it's
write
not
things in
Faulty
the comment.
Towers.
Right, that's it. I give up. Show's done. So, speaking of skipping ahead, I'm going to skip ahead too because I don't know how long this story is going to take. So I thought I'd put it in early. We can always dip something else
Just
if we need
after
to.
I switched to the other screen. Okay, which one are you talking about? Your one that I got
Now,
for you?
well, the one that we
Yep.
remotely agreed on that to be mine, yes. So I need to contextualise this story first. So I'm assuming everybody who listens to this podcast, or at least most people, are going to be aware of Rockefeller and the Rothschilds.
Rockefeller, Campanella, Communist Bloc, Roy Cohn, Wonkaron.
Ironically, the same person, yes.
He didn't start the fire.
And Soros as well, who's lesser known but just as bad. They're effectively the trinity of evil in the real world. If there's a war or an uprising, chances are they've got something to do with it. So Rothschilds effectively own, according to the story they're associated with, but effectively they own, between the Rockefellers and the Rothschilds, central banks. They own more shares, they own so much big business, they effectively own governments, they own private individuals, they own corporations, they own countries, like these guys. And the Soros is a massive multi-billionaire investor who seems to remarkably have this amazing ability to invest in things that are going to do really well. I don't know, just lucky, I guess.
Got a crystal ball.
Yeah. So just bear that in mind. They are responsible. So if interest rates rise or interest rates fall, or
it's because they want it to.
If Wall Street crashes, if markets rise and fall, it's basically because they've given it that command to do it, and they've got a reason for doing it. So effectively, they are scum.
Would that reason be
terms.
To make more money?
I mean, can you make more money than all of it?
Obscene amounts.
I mean, they've already got it all. I mean, how much more money do they need to make? But anyway, so keeping that in mind, and this is part of the reason that cryptocurrency is getting pushed the way it is, to get away from centralization and away from the ability of one person to own enough of it to have any control over it. It's also the reason that Russia's hated by America at the moment, because he got rid of them out of it, said, go away, you're not having to do with anything with our banks. But keeping that in mind, reports have emerged that George Soros is preparing to invest in digital assets, despite his earlier criticism of them, ironically. And the Rockefellers have also been reportedly joined in the crypto party. They own Venrock, which is their official venture capital arm, as opposed to their unofficial one. And they happen to have just signed... I'm just trying to remember what the Rothschilds is also using their official channels as well. So between all three of those, as of from, I think it's about December, January, they all started purchasing crypto, predominantly Bitcoin. There is a few other token-based coins in there, but predominantly Bitcoins is what they've all been going for. The problem is that Venrock owns one of the companies that is responsible for a lot of the blockchain development, and so part of the reason that there's been such a big jump in crypto prices is that exact reason, because once they announced their involvement in it, basically people pushed the currency up artificially, knowing that they were going to buy huge amounts of it at an inflated price. So even when it drops, it's not going to worry them, but that's why there was such that spike we saw at the end of last year, or part of the reason was an artificial push to basically get more money when they bought it. But the problem is there's not much information out there at the moment. This story has only come out today, actually, about lunchtime today, that I'd known about the Rockefellers for a few days, but it's only today that I found out that the Rothschilds and Soros are also involved in this. So what does it mean for the average crypto investor. Probably not on a small scale. Not going to affect you that much, at least now. But what it does mean is that if they purchase enough of any given coin, they effectively become the bank again. So they have the option. They then have control over that coin.
They call it in the crypto area 50. There were 51% attack.
Yeah. And from that point on, they can choose to do whatever they want. If they want to shut the coin down and bring money they're doing back into the real world, or if they want to bump the prices up, they can basically do whatever they want. Now, technically, most of the stuff they're doing is very grey areas at best, because being involved with companies that are developing security measures and developing a lot of the back end for crypto. I don't know if it's a law, but it's certainly frowned upon by the community that you're invested in the coin that you're developing. At least in this degree. So there's, I think, without getting too sort of end of the world, they're basically, it's not good if they get majority shares in a handful of the larger coins like Bitcoin and whatever's doing really well at the moment. That's bad news, effectively.
Particularly since a lot of the other altcoins' value is based on Bitcoin and Ethereum.
That's right. And as I was saying before, it relies on the ability to... The value of the coin relies on the ability to mine it and make it available. Now, if they're just buying the coin outright, and there's no work and process going into that coin, if there's 100 million coins available, and they've bought 51 million of them, even though there's only been 40 million coins mined, that's a problem. Because then suddenly it's not just the 51%, it's the 51%, but there's still 10, 15, 20% of the coins that don't even exist yet.
Yeah.
So they actually own, like me to do 80% of the coin. And if you own 80% of a coin that's worth a few $100 million or a few $1 billion, it's your coin. The company's going to go, hey, so what would you like me to do with it? and this is the problem. As we said, look, it's bad. There's some companies getting involved. We know Intel's getting in. We know AMD's getting in there. We know Google's most likely in there. Apple's going to do it as well. Like these, Samsung, they're all getting involved, and you expect that from a corporation who's got infinite server farms. They're going to get involved. That's part of it. But they're getting involved in the mining aspect of it. They're not buying the coins outright. These guys don't care about the process. They just care about the end result. So if there's...
And control.
As I said, if there's X amount of coins allocated, and they buy those coins that are allocated, whether or not they've been mined, it's just going to completely debase the currency. They also have complete control of the currency to do whatever they want.
Yeah.
And we're back exactly where we were
with the banks
when the American banks collapsed a few years ago. Yeah. It's going to be that all over again, except it's going to be happening instead of bank managers jumping out the window, you're going to have coin holders jumping out the window, because they've suddenly, all these people have got their ASIC miners and got their Ant miners and got all their miners happening, and they've worked hard for the last 5 years to get their 3,000-4,000 bitcoins or whatever they might have, to have that devalued completely overnight.
Might as well be MT Gox all over again.
Yeah, it's... I guess there's some merit to investing completely in altcoins, but then again, you're going to the same problem as you said. If the main coin drops out, the altcoin's worth nothing, because it's back. It's, even though it has a structure of that coin itself in terms of mining it and the availability of it, if it's based on a Bitcoin value and the Bitcoin tanks, does the value of that coin tank, or does the fact that it's a small coin and being independent?
Since January, when Bitcoin tanked, every other altcoin has gone down in value immensely.
and
but also has
but
the
yeah.
American stock market. So
well, which is, you know,
because they wanted
according
it to.
to the Ross. Well, that's what I was going to say. According to the Rothschilds, they've actually. It's a completely separate story I was reading, but they actually released a statement saying that interest rates are the lowest in 5,000 years, and you can thank us for that. It was one of their official official tweets. Yeah. So okay, you've completely debased the American economy, but yeah, no worries. Well, thank you for that, shall we?
Thank you, money gods.
Yeah. So look, take it with a grain of salt. At this stage, they're just starting to get into it. So right as of now, it's not really going to affect too much. The question is, what's their timeline?
And their plan.
And, well, kind of already know what their plan ultimately is. But
a bit obvious.
Yeah, what's their timeline in doing it? If their timeline's 10, 15 years down the track, which for them isn't unusual. I mean, they've got
generations
plans in place
of
now.
plans.
Yeah, that's right. They've got plans in place now that they put in place 2 generations ago. So it's not unusual that would happen. The question is, with crypto being the way it is, do they fast track that and make it happen in 12 months? Is it a 10-year plan? So for now, it's going to be just business as usual, I think, in some regards. But on the other hand, I mean, it's definitely affecting values already. Just knowing originally, that's what I was trying to explain. The reason this price spiked is because people knew they were getting vested in it and they wanted to buy it. So at the time they were in the market to start purchasing the currency, they artificially increased the price of the Bitcoin to try and reduce how much they purchased. The problem is, as soon as they stopped buying the coin, that because it was an artificial inflation, that price dropped back down, which is why it's continued to drop, because it was never a real increase in value in the first place.
Auto corrected itself.
More or less. On the upside, it meant they spent some extra. Well, I was going to say extra money. It's not really money. It was like pocket change they had laying around, but
they found it down the back of the couch.
Oh man, I'd love to just dive down the back of their couch for a couple of hours. You'd be rich.
The couch is about 6 foot off the floor.
Yeah, that's it. But yeah, so do yourself a favour. Now that they're being... I was really hoping it would be a couple of years before they got involved. I should have known better. Do yourself a favour. Do your homework on the Rockefellers, the Rothschilds and Soros. There's a couple of others in there you got to be aware of as well, but they're the 3 biggest players.
And don't forget, this is essentially the dip where you want to buy.
Well, the question is, do you? Because if they're involved in this, is this the dip or is this the trend?
Yeah. Because
if they've got their mitts into this already, this could potentially be the trend, and it will continue to downward spiral for the next 2 years. We just don't know. There's absolutely... In theory, you're right. In theory, yes, now it's a perfect time to buy. Now that they're involved, I would be watching to see what Soros does. I would be watching to see what coins he buys and how much he buys.
Yep.
Because I can guarantee you, he does not make a bad investment.
No. It'd be like saying Buffett's going to make a bad investment. Ain't going to happen.
What? Jimmy Buffett, he made a pretty bad investment. But yeah, it is really scary that these monsters can be involved in anything, let alone things that are really going to potentially destroy people's lives.
Yeah.
I mean, there's
not for the first time.
Well, no, and not for the last either. There's entire ecosystems based on Bitcoin. There's entire businesses. There's entire livelihoods based purely on the fact that Bitcoin is going to continue to be at least somewhat profitable. Yep. That can literally just disappear overnight.
Just ask
Bitmain. Destroy it. Yeah, well, that's it. So yeah, yeah. Look, there's a whole heap I could say on this, but basically, do your own research, get familiar with these guys if you don't know about them, and try and be wherever they're not. So if they're not vested in particular avenues, go there for now because it's potentially going to be safer. Some of the smaller coins might be a better option, But as I said, see what Cyrus is investing in, and anything that's related to what he's investing in, you can guarantee he's going to go gangbusters.
Where do we find a happy story?
Happy
Need
story.
to
That'll be the
recover.
next one.
Lately, a common recurring subject has been the ASIC resistance and how we should react to any potential threat from ASICs. This blog is setting out a somewhat formal stance on ASIC resistance, intention to maintain ASIC resistance by swiftly reacting to any potential threat from ASICs and considering slightly modifying the POW at a hard fork. This is all about Monero from getmonero.org. An ASIC, application-specific integrated circuit, is custom mining hardware that is specialized for a particular use. For example, Bitcoin ASICs are specialized to mine cryptocurrencies using the SHA-256 hash algorithm. Due to the fact that they are designed for a specific use, they will typically have a large performance advantage over hardware that is intended for general purpose use like CPUs, GPUs, and even FPGAs. Thus, any newly developed ASIC will obtain a significant majority of the network hash rate and introduce centralization. Monero strongly believes that it's beneficial to preserve their ASIC resistance. Therefore, they will perform an emergency hard fork to curb any potential threat from ASICs if needed. Furthermore, in order to maintain its goal of decentralization and provide a deterrent for ASIC development and protect against unknown or undetectable ASIC development, the Monero team proposes modifying the Kryptonite proof-of-work hash every scheduled fork twice a year. The modifications will be light and should not change the performance profiles much. The first change happened in the March fork. Finally, they will continue to research alternative proof-of-work functions that may provide better ASIC resistance than Kryptonite. Packages will be available the following software: Zone 117X's Pool, Sniper's Pool, Lucas Jones CPU Miner, Wolf Zero CPU Miner, CC Miner Kryptonite, SG Miner GM, XMR Stack, XM Rig NVIDIA, and Wolf XMR Miner. And for key reuse, it's important to realize the security of the Monero network and your own Monero is dependent on the security of your Monero keys. Your Monero keys are Monero keys. Do not use them for any other purpose, include claiming coins from a Monero fork. The Monero forks that I'm aware of is Aeon and Electronium. So don't use your Monero keys for those because it's just going to screw things up. It's not going to come out good for you in the end. But it's good that from my point of view that they're working on ASIC resistance, not for anybody who's bought an ASIC device. And in fact, there was Bitmain recently brought out an Ethereum ASIC device that was supposed to finally be able to mine Ethereum faster. They did a quick fork on that, which is going to screw over the ASIC purchases. So stick to your GPU mining with that one for now, guys.
Yes, it's once again, this is the next evolution in just making the coin do what it's supposed to do effectively. But it's good because it means, and this is a problem we have with most coins to some degree, whether Australia coin is a classic example. You know, one day you could mine it on CPU, next day you mine it on GPU, the next day you couldn't touch it. So, you know, having ASIC resistance isn't a bad thing. I guess it depends on what the coin's doing though. Some coins probably rely on that purely to function. So, I mean, could you imagine Bitcoin without ASIC mining? Like,
it's a toss-up because you want it to be available for everybody to be able to mine, but if ASIC's in there, then it's going to really power on ahead. But then again, I can't mine something that's got ASIC supported code because it's just too complex for even my GTX 1070 Ti card to handle.
And that's what I mean. It's a catch-22. I guess a bigger coin probably relies on it to keep the currency active. But the smaller coins, you don't want them, at least until the coin gets established. Like, Australia coin would have been a much more fundamentally user-friendly coin had the ASIC miners not being in there. You know,
and I think because it's based on Litecoin,
at least early on.
Based on Litecoin, you can't really change the algorithm like you could with Monero or something.
No, you can't. And like Litecoin now that it's established, having ASIC mining in there is not a problem. But early on, once again, it was a pain. I think it really depends on where the coin is in its sort of.
And I had a look into getting a Litecoin ASIC miner. Now they're about $1,200 Australian even, but was it a US dollars? Can't remember now. But you'll mine dollars. Like 0.05 per week. Yeah, even with a hardcore ASIC miner, and I had a look around Reddit, and somebody had done the math on it. They did the math, and it's like the amount of electricity, because these things chew down the electricity like crazy. They got like 189 mini CPUs on there, suck down the wattage out of you. Even if you've got solar, you need minimum of 10 kilowatt system and a backup battery that can still supply 10 kilowatts overnight to come out even. And then
which you can't do.
And then you might make 0.05 of a Litecoin a week or something like that. And it's like I thought maybe a day, or maybe I could make one Litecoin a day, because it's not high value. Litecoin's only is back down to about $150 worth, but you still can't mine it. Even if you've got an ASIC miner, it still takes a bloody long time. And I'm like, they see these people, I've got 6 Litecoin ASIC miners running 24/7. I don't know how they do it. They're not in this country, that's for sure, because electricity, right.
Well, they're using the neighbour's power.
Yeah. Sounds like a Mr. Burns kind of thing.
Because isn't there also, was it you I was talking to? Well, somebody last week about ant miners.
Yep.
They're just a lower end version, aren't they?
No, that's the ASICs themselves. They call them ant miners. It's from Bitmain. Okay. It's a Bitmain brand name for their
that specific brand name. That's right. Yeah, I actually quite like that name. I think that's quite cool. An ant miner.
Isn't he from Marvel? Ant-Man.
Ant-Man.
He's only a miner. He's not an adult yet.
Yeah. Ant-Man and Flea-Man got together. And actually, the reason I like Antminer as a terminology, because it kind of makes it work in your head, because you think of this box with all these little tiny CPUs effectively, but you think of them as all these ants inside this box, and they're all processing this, doing this one task, whether they're all digging the hole or whether they're all getting food, or this whole colony is doing the one thing. I actually really like that Antminer as a term. I think
good analogy.
It sort of, it really just works to make you understand sort of what happens inside there.
And what's MailChimp been up to, Mr. T?
Well, for those who don't know, MailChimp is I guess it's an email marketing tool, really.
Yep.
If you've got spam, chances are it's come from MailChimp. No, wait. That's the opposite of what they're trying to achieve, isn't it?
Accidental side effect.
Yeah, that's right. The side effect of being a bulk email client
is people can bulk email you anything.
That's right. So email marketing tool MailChimp joined the list of platforms to introduce a ban on cryptocurrency content. The development follows similar, though less imposing, bans by Google, Facebook, LinkedIn. Now, hang on. I have to stop here, because Google, Facebook, LinkedIn, Twitter. Well, I don't use Snapchat, but I use Foursquare. Foursquare? No.
Instagram?
The other one that everyone uses. Instagram. And I can guarantee you in the last 2 weeks I have seen more cryptocurrency spam from all of those accounts than I have ever seen previously. So, banning them my backside. But
Isn't it ironic, don't you think?
I tell you, it's like the people who made the ads and the spam have gone, okay, they've banned cryptocurrency, so let's see how many ads we can get through the bots. It was like a challenge. It's been so bad. And every single YouTube ad, because on my phone I don't have ad blocker on my phone. Every single YouTube ad on my phone has been, well, actually most of it's been that bunny coin.
Oh, okay.
Almost all of them have been bunny coin.
Yeah, what's up, Doc?
They've all been, wrong sort of bunny. These ones live in a mansion where ears and a tail. Well, actually, do they still live in a mansion? Is that still a thing? No,
He's gone.
Anyway, I'm assuming his mansion, everything still exists. Yep. But anyway, while it's unclear whether what tangent, where, what?
Where are we?
While it's unclear whether the ban has been implemented off the back of a spike in the user base being scammed, or if they followed the lead of big tech companies out of caution, MailChimp has made amendments to its acceptable use terms. In a statement to Gizmodo, MailChimp further clarified, "We recognise that blockchain technology is in its infancy and has tremendous potential. Nonetheless, the promotion and exchange of cryptocurrencies is too frequently associated with scams, fraud, phishing, and potentially misleading business practices at the time." Punctuation, people. The company's response implied it was a less moral crusade, more an issue of protecting its brand and technology analyst Ben Thompson suggested if MailChimp can't deliver content to people inboxes because it's stuck in spam filters, its ranking as an email provider will plummet. And if cryptocurrencies are frequently associated with scams, fraud, phishing, and potentially misleading business practices, as MailChimp suggests, it's surprising they want to disassociate themselves from the culprit. Yeah, and as we said, look, I can go through my email. Well, actually, I'm going to do that right now. I'm going to quickly just load up my Gmail. And I'm going to go and have a look in my Gmail folder, in my spam folder, which was traditionally, up until a few weeks ago, full of, effectively porn and normal Nigerian money laundering scams. Let me go spam. 103 in the last couple of hours that I cleared it. So let me see. Crypto
I like
tips,
the Milton
crypto
meme
wealth.
from Office Space on that webpage. I set the building on fire.
So we've got crypto tips, we've got crypto wealth, we've got Bitcoin deals, GG servers, mining servers, small bit. So my top 30 spams that I've had in the last hour are all pretty much, except for that one. That one shouldn't be in there. That's actually not spam. Thanks Google, you did well on that one. But yeah, so basically they're pretty much all crypto, except for that Woolworths scam that, hey, you've just won $1 million from Woolworths, please contact us.
Really? Congratulations.
Yeah, I know. What am I doing here? So yeah, I'm going. But yeah, so effectively look, it's all fine and dandy to say that they're cracking down on it, but to what degree? I mean, as I said, everywhere you go, you're seeing more and more ads for it. Now, my question is if it's a legitimate business and it's a certified Google business or certified, because you can be, anybody can buy AdWords, but you can be like we are, at work, we're a certified business, so we have priority when AdWords come up in that area because we're an actual real bricks and mortar business.
Yeah.
So I'm wondering, does this work the same way? If they're a certified business or a legit business that can be certified or registered, or they've got real Facebook page, a real web address, all this sort of stuff, do they still allow advertising effectively?
Crypto.
From a because I can't imagine them being able to stop. If it's a legitimate business, I can't really see them how they can stop them advertising. So I'm wondering if a lot of the stuff that's coming through to some core, like it started off as a legitimate business, then the spammers have seen those ads get through, done their calculations on how to get past the system, and done the same thing. But yeah,
Most likely, yeah.
It's truly horrendous, the amount of crypto spam floating around. It's even my mother-in-law's computer, who doesn't even know what cryptocurrency is. She's getting it on her Facebook page. Yeah. And I don't think there's been a day in her life where she's even typed it into Google. Like, it's...
What even is crypto?
Yeah, exactly. Well, that's probably what she typed in. What is cryptocurrency?
Oh, you want lots of ads about crypto. Let me help you with that. It says Facebook.
Yes. So I don't know. These whole things they talk about, the bans and the bans on cryptocurrency content, they're not very in depth as to what they're actually banning.
Yep.
You know, I get that they'll obviously ban the obvious scams, but they do that anyway, regardless of what it is.
Yeah,
or at
sometimes
least they
it's
try
hard
to
to
as much
know
as possible.
which one's going to be a scam. I mean, take a look at Verge.
Mm.
There's an interesting story if you want to look into it. Anyway,
Yeah.
and the coin of the week, we're not recommending purchasing it, just explaining what it is and what it can be used for, particularly if it has a good real-world use. This week's coin of the week is Tron from the Tron Foundation, and you can find this at tron.network website. Tron is an ambitious project dedicated to building the infrastructure for a truly decentralized internet. The Tron protocol, one of the largest blockchain-based operating systems in the world, offers scalable, high availability and high throughput support that underlies all the decentralized applications in the Tron ecosystem. Tron protocol and the TVM allow anyone to develop apps, digital apps, for themselves or their communities. Smart contracts making decentralized crowdfunding and token issuance even easier than ever. Tron app projects already include Paywo, OBK, UpLive, Game.com, Kitty Live, and Miko, with 100 million plus active users from more than 100 countries and regions around the world. Tron takes a beating on social crypto groups, but there's no denying that it has performed better than most of the other altcoins during this downtrend. The spike recently was due to a listing on South Korean exchange Upbit, where the altcoin can be traded directly in fiat, KRW. Additionally, its founder, Justin Sun, has graduated from Hupan University, an educational institute set up for budding entrepreneurs by Alibaba boss Jack Ma. The double pump has put Tron ahead of its digital peers yet again for the fourth time since the beginning of March. Current value of Tron, if you want to invest in it, is $0.046 or 4.6 cents Australian, and I've got 400 Tron. And I bought that quite a while ago, but I recently looked into, they're looking at starting their own Masternode type things. They've set up a test net where you can install some code on your Linux box or Windows box, so long as it can run Java, and you can become a test node for Tron. And you can also have the ability in the future to become part of the mainnet. It's kind of like Dash Masternode, which we'll get into Masternodes a bit more detailed in a minute. But Dash was one of the most popular ones, and it ended up being, to even start your own Dash Masternode, you needed about $1.5 million. So it spiked up quite high, but it's come back down again. And
Rothschilds will be there next week.
Yeah, it's only about 310,000, but still a bit out of my reach. But it did well, and people made some money from it, and it's still ongoing. But yeah, I've set up the test to connect to the test net, test node. You can also set up a witness node or a full node, and in the future you'll be able to possibly join the mainnet, so long as you can pony up 100 TRX and get people to vote for you.
Which isn't much these days, it's only a few bucks.
Yeah, and if people vote you in and you become a full node on the mainnet, once they launch that, I think it's start of May or something like that. At the moment they're just testing with the test net, but once they go full and you get voted in, then you'll be able to become a main node and make some good Tron out of it.
I love a couple of things on their website. One is you go to their contact information. So we've gone to the days where there's an address and a phone number and an email address.
Yep.
They've got a WeChat, they've got a QQ group, they've got 4 different Telegram accounts.
Yep.
They've got 3 different Twitter accounts. They've got a Weibo account, a Facebook account, a Slack account, plus their regular email account.
And there's a Discord channel that I've joined now too.
Oh, is there? So apparently if you can't be contacted 37 but in different ways, it's just not
That's
cricket.
right.
But I just love on their blog, A yacht company in Florida now accepting TRX to buy a yacht. A yacht company in Florida now accepting TRX to buy a yacht. The founder, Dennison himself, is a cryptocurrency enthusiast. He began investing in cryptocurrency about a year ago and has small holdings in Bitcoin, Ethereum, Bitcoin Cash, Litecoin. His personal favourite is Tron, and he also bought TRX into his work. So if you've got probably a few 100,000 TRX floating around, you can buy yourself a yacht.
Why not? Exactly.
Good to see real world applications of Bitcoin cryptocurrency.
I always wanted to get a yacht. Why not you? You want a yacht?
Yacht.
Alrighty, and our request from the Crypto Cobbers Australia Coin Group was to learn a bit more about Masternodes. So I've got some info from the Blockonomy website, Complete Beginner's Guide. You can read more at blockonomy.com/masternode-guide. But simply put, a masternode is a server on a decentralized network. It is utilized to complete unique functions in ways ordinary nodes can't. It can be used for features like direct send or instant transactions or private transactions. Because of their increased capabilities, masternodes typically require a sizable investment in order to run. But this is where incentivization comes into play, as masternode operators are rewarded by earning portions of block rewards in whatever given currency they're facilitating. No masternode is quite alike, as each network has its own pros and cons. But with that said, every system approaches payouts in a different way. Some cryptocurrencies pay out rewards to masternode operators multiple times a day, whereas other projects pay out operators once daily. The benefit of this dynamic is that the operators can still earn money and provide a service to the network without having to invest in expensive cryptocurrency mining gear, such as the ASICs we mentioned before. If interested in becoming an operator yourself, you need to lock away what's usually a large number of coins and set up a server through which these holdings can do their magic, as it were. Many cryptocurrency users who don't know better assume that masternodes are an extension of proof of stake coins, i.e. cryptos that aren't mined but are staked, but that's not true. They are proof of work projects that make use of masternodes, so these kinds of nodes aren't exclusive to POS or POW. With that being said, running a masternode is POS-like, in the sense that you generate passive income through a masternode just by holding your coins, similar to how stakers earn in POS systems. So it's something to consider. You can make passive income with a masternode just like you could through a POS cryptocurrency, but you don't need POS crypto specifically to run masternodes. How much money can masternodes earn? Well, that depends on a few factors. What coin you select, how that coin facilitates masternodes, how much of your selected coin appreciates in value in the coming years. So there's no one-size-fits-all answer, as every project will work differently. Some will be more profitable than others, some less so, but regarding the third point above, everyone running masternodes will be sitting pretty if the entire cryptocurrency market continues to surge up in unison. The bottom line, a masternode is sort of like next-level holding. You have to hodl a large amount, but in doing so, according to a specialised process, you'll earn constant block reward payouts. And these payouts could be a trove in a decade if prices continue trending upward in the long term. You can find a list of masternodes and coins information at masternodes.pro. And MN worth on that page is how much you need at minimum in US dollars fiat to invest in order to create a masternode. They run from about $60 to over $390,000 depending on the coin. You have to be certain to fully research the coin and its viability going forward. You may find a cheap one to invest in, such as the $60 masternode, but it may not go anywhere. Then again, there's no guarantee an expensive one will either. So to set them up, usually you have to rent space on a VPS, which could be $5 a month or $20 a month depending on how big it is, or $60 a month, and if the value of the coin doesn't appreciate enough to cover that, then you're in the red, so it's not ending up to be worth it. Dash is known to have been the most successful masternode launch. Now it costs around $390,000 for one masternode. You can find that at dash.com/masternodes. 2.
Dash.org.
Yeah, it's dash.org. Masternodes are required to have 1,000 Dash collateral, a dedicated IP address, and be able to run 24 hours a day without more than a 1 hour connection loss. Masternodes get paid 45% of the block reward on every block, which is distributed to masternodes one at a time. Typically around 2 Dash is paid to each masternode every 7 days, and 1 Dash equals $390.95 Australian. Basically, running a masternode involves having the right amount of initial coin, renting a VPS somewhere, and running a script on it to connect to the masternode network. So I hope that's cleared up a bit of stuff for some people. If you have any more questions, you can always tag us in the Crypto Cobbers Facebook group, or send us an email from the website or something like that, and we can help you out with anything that you're not clear on.
So basically, it's not quite as simple as it's a giant pyramid scheme, but it's not quite as simple as a giant pyramid scheme.
Yeah, very highly technical one. So now a lot of them usually have to pony up about 10,000 to 100,000 of whichever coin you want to stake against on the masternode. So it could start off, $60 for a coin that's worth 0.000006 cents, or it could be a coin that's currently worth 30 cents. But if you have to pay $10,000, 10,000 of those coins at 30 cents a coin, it can end up being a lot more money than you want to pony up.
Well, that's why I think this where Tron's going to fill that gap in. I think they'll be sort of, there's somewhere even they're sort of a masternode, but they're not.
Yeah.
So it'll be that. It'll be a good way to get into it anyway, without having to spend a huge amount of money. Although I'm sure the value will go up, but yeah.
Yeah. So long as you can, you'll get your 100 TRX request to be a masternode. If enough of the people who are, I think, current masternodes vote you in, then you can become a you can become a node. I shouldn't say masternode. It's a different terminology with TRX. But you can become a node if people vote you in. If you don't, then you'll have to try again next time and pony up another 100 TRX and see if you can get in.
Well, you can't use the same 100. How rude.
Well, you might be able to. I don't know if you spend
if you lost it every time,
or you get it back. Who knows?
That'd be a pain if you lost it every time. That'd be really annoying.
It would.
One thing too, just quickly, I know it's really funny the amount of Android applications that are out there for this. It's just the nature of the beast that the Android device is easier to write for, and a lot of the times they're not even approved on the App Store.
Yep.
There is, however, one little Apple sort of incentive that they you can use now to help you stay in the crypto sort of feel, the crypto spirit. And it's that really useful invention that Mac brought out a couple of years ago that wowed the world and took it by storm.
Sorry, I just got something stuck in my throat or something. I don't know.
I'm sorry, was I being facetious? I can't tell anymore.
It's just natural.
Yeah, I know. We're talking about Mac. I'm sorry, it just happens. I don't have any control over it. But yeah, so we're talking about the MacBook Touch Bar. The thing above the keyboard that nobody uses and nobody actually wants.
And everyone hates.
Well, that's not true. I know one person that uses it. I don't know if he knows he uses it, but he uses it. But basically what they've done is they've now made a crypto ticker, effectively, that goes up into that touch bar. I don't know what else it does. The initial impression I got is it's literally just that. I don't know if it morphs or changes or does anything else, but from what I can understand, it literally just scrolls the price of cryptocurrencies across the bar.
That makes it interesting if you want to see something useful on that bar.
Because you couldn't use it for anything else, like weather or you can
play. Somebody wrote an app so you can play Doom on it.
Yeah, because that's useful when it's 3 pixels deep and 600 pixels wide. The scaling works really well.
But you can do it. That's the main thing. That's all that counts.
I have to admit, that was the thing. I remember when I was in school, they brought out a scientific calculator that there was a Doom hack for. You could put Doom on it, and
Yep.
suddenly this scientific calculator was like the #1 calculator in the world all of a sudden. So as long as you can play Doom on it, that's the main thing, right?
Yeah.
But yeah, so I don't know. I mean, in my mind, the person who wrote this, I can see him sitting there going, those poor Apple users have nothing that they can use crypto on. I know. I'll make them feel better. I'll write a ticket for the bar. I can just see that happening.
Now they can be happy about the money they spent on a computer that's got that useless touch bar on it.
Yeah. It was. I mean, look, if it was probably double the width that actually is, or if it even replaced
height,
maybe the number keypad, and it was that size, yeah, maybe. But yeah, no.
You might as well get one of those OLED keyboards where you reprogram every key.
I was looking at those the other day. Damn, they're expensive.
Yeah.
Even a cheap, nasty Chinese rip-off is still like $600.
Yeah. It'd be nice though, right?
Oh yeah.
I got.
But
when I bought my daughter's latest computer, I got this cool keyboard that you can program. It has programmable LEDs underneath each key to light up.
Yeah.
So you press a key combo and they all turn green. You press a key combo, they all turn blue. You press a key combo, there's rainbow spread across the keyboard. Press another one, the rainbow starts moving, sweeping through each of the keys, going round and round and round, which is a bit annoying if you turn off all the lights and suddenly you got this disco of rainbow colours going through. But she likes the rainbow setting just on the still one, so the QWE is purple and RTY it changes through the rainbow all across the keyboard.
Yeah, actually, if you want to see a good review on weird keyboards, and it also includes mechanicals and actual Linus. I don't not a big fan of Linus Tech Tips, but he did do a good review across the spectrum of him, and I think it's the unboxing guy or something is another one who did it, and they took everything from the $3 AliExpress specials right up to like the $2,000 keyboards, and they critiqued each one, and there's some really surprising results for $30 or $40.
Don't have to spend
really
too
high
much.
quality keyboards. Yeah, there's actually
Logitech for the win.
One of my favourite ones is the waterproof one that when it gets dirty you flip it upside down, chuck it in the dishwasher.
Leo was talking about you could do that with any keyboard.
You can do it with most keyboards. You can't do it with any keyboard. You can't do it with the Microsoft ergonomic one that both you and I have, because
I tried it.
The up and down.
It didn't work too well.
Well, you've got to watch it because all these buttons across the top here. There goes an SD. All these buttons here, this up and down, and these two here are actually little micro switches. They're not silicon touchpads, so they will fail. But anything that has just the standard plastic on plastic silicon conductive boards, yes, absolutely, chuck it in the dishwasher. It works perfectly fine.
So what should I chuck my ergonomic keyboard in to clean it?
Pop all the keys off, one by one preferably, otherwise you have a bad time. And chuck them in. I've actually chucked mine in the delicates bags that you put ladies' things in for the washing machine. Yeah, actually, they're really good. They hold an entire keyboard worth of keys. Yep. So you chuck them in and you chuck them in the washing machine.
What if you chuck it in the washing machine without that bag? Then what happens?
Yeah, you're probably going to have a bad day if you do that. Although it couldn't be any worse. I wasn't thinking and I took all the keys off.
You weren't thinking? Well, there's a first.
Yeah, I know, right? That happens so unusually. But I had a macro keyboard. So this whole section here was all custom keys.
Yep.
And they were just like random symbols and stuff. And yeah, so I just took all the keys off and chucked them in and then got them out and went,
what do they do now?
Where did they all go? So for the next 2 months, I spent pressing. Oh damn it! That key's in there. Hang on, which one? No, that one. Yep, that key goes there.
Oh dear.
That's anyway the whole squirrel thing again.
Visit our website at aussietechcrypto.com. Send us an email from the Contact Us form or jump onto Discord to talk to us. Don't forget to like and comment about this video. Give us a good review in the Apple and Podcast Store. And at the bottom, as usual, and around the edges this time, since Mr. T suggested it, we'll have our various wallets that you can scan, because apparently having three together is annoying.
Two QR codes next to each other, apparently the QR readers don't like it.
Yep. So there's one of his and three of mine, so you've got a good choice there.
Pick mine. I'm assuming this one's going to be mine. It usually is. I don't know.
It is going to be. Pick mine,
because I'm broken, Paul.
Desperate. It's a bit
desperate. I'll do it.
He's a bit povo at the moment.
Give me all the NARS. I think I've currently got about $2 worth, so I'm getting there.
He invested all his money in Virgin. Now he's regretting it.
That was Virgil beer.
Beer would have been a
better investment. Anyway,
thanks for watching, and we'll see you next time. Bye.
So yeah.
This show is a part of the Aussie Tech Heads podcasting network. You can listen to us at aussietechradio.com. We're not licensed advisors, so please don't invest your life savings in anything we say on the show. You can contact us at feedback@aussietechcrypto.com. Visit the website aussietechcrypto.com. Thanks for listening to Aussie Tech Crypto. Tune in each week for more fun and information.